Amisha Vora of Prabhudas Lilladher joining in. Amisha, how do you rate the budget? Is it in line with what we were expecting? Some disappointment on the LTCG because I think we all were secretly hoping that LTCG doesn't make a comeback, but I guess the finance minister had different plans. Markets have sort of managed to hold up, all thanks to the big hands like SPI and LIC. But going into trade tomorrow, what is going to happen? Is this a dent to the sentiment, you think?
I think on the fiscal discipline front, despite the biggest rollout of reform in terms of GST, etc., the fiscal deficit target for current year at 3.5 and next year at 3.3, I think is pretty decent. And it still, to me, suggests that they are continuing on broadly the consolidation path, but allowing for a little bit change because of the reforms. I think long-term capital gain, the positive side is that it is very smartly rolled out by saying the 31st January as the cutoff date, grandfathering. That's a very smart move, but I still somehow feel that over the next 2 months, as the new rules will be applicable from 1st April, the next 2 months, some weaker moments either on macro here or globally can prompt a little more selling than it would have been otherwise. Also, I think one underlying fact is that now the difference between long-term capital gain and short-term capital gain is minuscule 5% as compared to earlier 15%. So the temptation to do short-term trading can increase, and I think will increase. Positive for cash segment volume, but also at times, it doesn't hold back that long-term investors because the change in tax rate is very minimal, and that can prompt them to also play the momentum at times. So, but having said that, I think that this was the only opportune time to probably have done this if one wanted to do, because the sentiment and overall inflow into markets is very high. And since the other revenues like meat, real estate and gold has not shaped up so well, markets maybe will take it into its stride with little bit weakness in short term, I would say.
Right. Amisha, if I had to ask you, what are you recommending now to your clients, to your viewers, to our viewers? New highs, new sort of another 10-12% sort of rally could be a given this year, or could we see the home run of 2017 repeat itself?
No, I think such a sharp move as was in the last year. I think it is difficult to repeat this year. Also, I feel that we are at such an interesting juxtapose when the macro is becoming little worrisome. I wouldn't say much, but be it oil price, be it trade deficit, or be it some of the global move like what would happen to dollar post taxation changes there, and the bond yields over here and the borrowing program, etc. I think with that macro underlying, there is also a good amount of momentum getting built. Be it commercial vehicle volumes, car volumes, or scooter and tractor volumes. As also, we will see little earnings momentum both because of base effect as well as the actual earnings doing well. So it will be interesting to see, but I would say that repeating of 2017 performance both for indices as well as stocks will be difficult in 2018. Having said that, I would say that if the market still remains on a indices level range bound, there will be enough and more stock picking opportunities, and that is what will be very interesting and can bring a little more sanity this year as compared to last year.
Well, we've only got a couple of minutes to go to market closing. Thanks, Amisha, for talking to us today.